Now, the calm over India's elections leaves derivatives traders in stocks exposed to surprise outcomes. Indian option traders do not appear concerned about the possibility that the next general election might disrupt the market's rising trend and expose them to an unexpected outcome. Take a look at this next report for more details on this.
With the world's greatest democratic exercise drawing near, the value of the Nifty 50 index's monthly options expiring shortly after the election has increased marginally. This suggests markets bet for the current government to continue in power after the polls. However, its premium over April is 61% lower than it was before the May 2019 elections. This suggests the risks are higher for any other outcome than a solid majority to the current government. Corporate profitability, retail investor involvement and foreign inflows have contributed to 8 consecutive years of record stock price increases in India. Low volatility has now begun to rise again, coinciding with a sell-off in small and mid-cap shares in response to warnings from the securities regulator on overvalued stock prices. With the Bharatiya Janata Party's triumph in December's crucial state elections, the political uncertainty surrounding India's $4.3 trillion stock market has diminished. Prime Minister Narendra Modi eyes a third term in office during the 6-week national elections, which begins on April 19th and will end with the counting of votes on June 4th. Previously, Indian benchmark stock indices rose more than 2% in the month following the 2019 election. Previously, Indian benchmark stock indices rose more than 2% in the month following the 2019 election. But they lost all of that and more in the months that followed. Since then, though, the options market has expanded by a factor of more than 100. That is due to an influx of individual investors drawn by the promise of enormous profits. Now traders are paying more to be protected from larger market swings later in the year, when attention will turn to India's budget and the US presidential elections. Bureau Report, WION World is One.
And based on this, in the run-up to the general elections, it's been observed that Indian options traders do not appear concerned about the possibility that this next general election might disrupt the market's rising trend and expose them to unexpected outcomes. As you know, of course, the world's greatest democratic exercise drawing near, the value of Nifty 50's index's monthly options expiring shortly after the election, it's increased marginally. And this has suggested markets' bets for the current government to continue in power after the polls. However, it was the premium over April, that is 61%, lower than it was before May 2019. Prime Minister Narendra Modi eyes a third term in office during the 6-week national election, which will begin on the 19th of April. And in light of all of this, it has been observed that Indian options traders do not appear to be that concerned about the possibility of disruptions. And to discuss this further, we are now being joined by Mr. Ambrish Baliga, an independent market analyst live from Mumbai. Thank you so much for joining us on World Business Watch, sir.
Thank you for having me.
Sir, now to begin with, what's your outlook for the Indian stock market for the second half of the year?
See, the markets have already discounted to a very large extent the expectation that this current government will come back and with a better majority. I mean, clearly people are talking of 400 plus seats, which will empower them to undertake major legislative changes. So I don't see any major positive surprises post-elections. But however, in case these expectations are not met, I mean, there could be a room for disappointment. So unless we really see a decent correction pre-election, I don't see a major rally post the elections, as valuations are already quite stretched. I think the other factors for the rally could be good monsoons and the Q1 and Q2 earnings of the next 2 quarters. But as of now, if you look at the early indicators, they are pointing towards an above normal monsoon. But unless we see the revenue growth and stable margins driving the earnings season, it would be difficult to really support a good rally post July, August. So I don't see a repeat of what we have seen in the last 18 months. I think it would be more of a consolidation or a correction before the next major move up.
Right now, of course, sir, just for more clarity on what you've just touched on, as you know, it's an action-packed year, poll results, full budget or US presidential elections. I want to ask you, what will play a bigger role in determining the course of India's stock markets this year?
Clearly, I think the election results, I think that will have a major bearing on the markets because, especially, if it doesn't meet the expectations which we just discussed. However, post that, I think the markets will look forward to the full budget. But what we have seen that unlike in the past, we have seen major policy announcements outside the budget. So the budget, just becomes an event which does not have any major bearing on the markets. I think the effect lasts just for a couple of days. Whereas if you look at the US presidential elections, clearly Trump is seen as a friend of India. So him coming back would be positive for India. So if that happens, I think the markets would react positively. But like I said, overall, I see more of a consolidation and a correction in the second half.
All right. Well, Mr. Baliga, thank you so much for joining us on World Business Watch with your insights on this.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.